profits in the second quarter. Net income grew to almost $1.9 billion from just a tad over $800 million last year. Chief James Gorman says there's momentum across businesses, in particular iBanking and equity sales. Shares rose during the day but ended down. And there we go. Morgan Stanley, 32 and change. Devin Ryan, Managing Director, GMP Securities, joins us from New York. Devin, good evening to you. Thanks for waiting patiently before we brought you onto the program. Was there something about the Morgan results that were surprising or pleasantly surprising in any way that sets them apart from the pack that have already reported?
Yeah, I think Morgan did what they were supposed to do today, and that was beat expectations. You know, we've had some pretty solid results from the bank peers that have already reported over the past week, and the bar has been reduced over the past week. And so, you know, they did report, you know, I think a better than expected number, really strong results within investment banking. So that stood out as a highlight. And then a little bit more resilience within the fixed income trading line that we have also seen from some peers. And it looks like June was a little bit better trading month. And so I think the market side, you know, some relief from seeing that result. And then lastly, within global wealth management, you know, their you know, market-related retail business that did very well, and that's a business that we're very constructive on for the firm.
You know, Devin, we're getting closer and closer. We can't really, you can't deny the clock. You can't avoid the effects of time. You know, as every meeting goes on at the Fed and they roll out Janet Yellen, and then she talks, and we have to decipher what she's saying. We know that we're getting closer and closer to a bump up in the, you know, Fed funds rate by at least a quarter point, probably Q3, Q4 next year, by most people's reckoning. As we get toward that event, what happens to Morgan and all their business lines and the way they've restructured themselves to rely less on, you know, fixed income bonds and more on managing money for the wealthy?
Well, a couple things. I think first off, within the global wealth management business, they have a lot of leverage to rates moving higher. And so that will actually be a positive for that business. But I think actually within the fixed income businesses, you know, those businesses have been pretty challenged. And part of that, I think, is because rates have been so low and clients have been sitting on their hands waiting for action from the Fed. So to the extent we actually get some movement, that could create some volatility, which would be much needed in that market. And so I'm actually looking at that event as potentially something that could be a catalyst to drive more activity for some of those trading businesses, which again are really depressed, and part of that is because of where volatility is right now.
All right, Devin, where do you rank, if you're at liberty to say so, where do you rank Morgan right now? Do you see a lot of capital upside, or do you think it's you know, priced very fairly for the kind of business that they're generating for shareholders right now?
It's a great question. I mean, we are looking at Morgan right now as potentially being a little bit range bound as we head through the summer, just with some softer data points, you know, slow activity. That being said, we're very constructive long term on Morgan, and really, you know, that's because Morgan has made a big effort to change its business mix, and now half of the business, or more than half of the business, is coming from, you know, asset and wealth management, which are low capital, high growth, more stable. And so if you're thinking about the return potential of the company and the growth potential of the company, it's well above, you know, what we've seen in the past. And so that would argue for a much higher multiple, and we think that the shares are not fully appreciating that view yet. So we still remain very constructive kind of from a longer term perspective, but we think near term you may be a little bit range bound as we muddle through the summer here.
And you initiated coverage on GS Goldman some time back, and have yet to initiate coverage on the others. But, you know, against their peers, against, say, a Lloyd Blankfein company, I mean, how does Morgan stack up? I mean, are they top of the heap, or are they is it a pretty much peer-to-peer comparison?
Yeah, I think they've been doing really well, and part of that is because of the difference in their business mix. So they've really, again, made that push into asset and wealth management, and so they're less reliant on the trading businesses than they used to be, and those are the businesses, in our opinion, that are facing more of the structural headwinds, the businesses that really are being impaired by higher capital requirements, you know, the regulation that has been impacting all these firms for some time. So, you know, Morgan Stanley is in a great position, in our opinion, because there is such a good outlook in the asset and wealth management businesses, which are now, you know, again, more than half of the overall firm.
Devin, thank you for your time, okay? Have a good rest of your evening. Thanks for spending part of it with us. Devin Ryan joining us from GMP. New York next, what big business wants from